You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, May 19. I'd like to share some thoughts about Finance Daily. Imagine the government, forcing you to sell a perfectly good income-generating asset for scrap value, all in the name of debt relief.
Right. It's a huge tension in Korea's financial system right now.
Exactly. So today's deep dive is exploring this fascinating three-way tug of war. We've got rigid top-down debt forgiveness, then massive state attempts to engineer regional economies, and the quiet success of grassroots lending. And this is all happening while government bond yields are surging.
Yeah, and I mean, the perfect starting point to understand this friction is the New Horizon Fund.
Right, which is the policy mechanism designed to clear long-term delinquent consumer debt, right?
Yes, specifically principal amounts under 50 million won, which is about $35,700. It's managed by KAMCO, the state's bad debt manager, but the pricing mechanism they structured is just creating this massive bottleneck.
Because it's a rigid 5% purchase rate, right? Which is, honestly, it's almost insulting.
Exactly. Look at the Korea Student Aid Foundation. They're a public institution, and they are already recovering 18% of their loans on their own.
So they have zero incentive to sell at 5%.
None at all. They flat out refused, especially since, a similar fund back in 2014 offered them 21%.
Wow. And it's not just public institutions pushing back, right? What about the DABU sector?
Right. So the DABU sector, those are the licensed consumer lenders operating between commercial banks and illegal loan sharks. Only half of the top 30 operators even joined the fund.
Is this like a pawnbroker offering scrap metal prices for a working watch?
Yeah.
Won't this just force lenders to choose between participating in a state mandate or, preserving their own solvency?
Yeah, it really does. And it echoes the post-2012 European bad bank programs. When policy imposes a purchase price that's completely divorced from actual recovery rates, you just break the lower income credit ecosystem. Price-driven models fail if they guarantee an unsustainable loss for the seller.
Okay, so blunt individual debt relief isn't working. But what about the other side of state intervention? Like the Financial Services Commission or FSC, trying to shift corporate activity out of Seoul.
The sheer scale of this one is staggering. The FSC signed an MOU with regional banks to co-invest the National Growth Fund,
Which is a massive 150 trillion won, or roughly $107 billion vehicle, right?
Right. And 40% of that fund, so 60 trillion won, or about $43 billion, is targeting non-Seoul regions.
That's to support their 5-pole 3 special regional development strategy, if I remember correctly.
Exactly. And they've already deployed 8.4 trillion won, which is $6 billion in early 2026.
Throwing $43 billion around, that's sovereign wealth fund scale. But you have to wonder, can policy finance actually reverse decades of Seoul-centric economic concentration?
It's a fair question. Capital is just one piece of the puzzle. Businesses agglomerate in Seoul for deep structural reasons, which is why it's so fascinating to contrast these rigid state funds with hyperlocal trust networks.
Like the Seongbuk, Jeil, Saemaeul. Let's explain what that is for listeners who might not know.
Sure, so they're member-owned community savings and lending cooperatives. They were born in the 1970s.
And this specific one holds 329.4 billion won, or about $235 million in assets.
Right. But what's really interesting is their 32-year track record of community engagement. They've awarded 277 million won, about $198,000 in scholarships over the years.
Yeah, and recently they gave 20 million won, or $14,000, to 20 local students. So that's 1 million won, or $700 each.
And, giving out scholarships isn't just charity. It's really the foundation of their lending mechanism. Because they're deeply embedded, they actually know these families.
It's qualitative, relationship-based lending. So they succeed precisely where standardized policy instruments, like the New Horizon Fund, fail.
Exactly. They know if a borrower's business is just temporarily struggling or permanently underwater because they interact with them every single day.
Wow. It really leaves you with a provocative thought. As Korea's economy evolves, will systemic stability rely more on 150 trillion won top-down mandates or the quiet, trust-based judgments of neighborhood cooperatives? That's today's AI PRISM, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Won IFAR award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.